Money Matters is sponsored by Winona National Bank. Personalized banking.
My main concerns about banking online was I wasn't sure I had control over it like I did if I did banking actually in a bank. My kids told me that, you know, Mom, you can do this. It makes life a lot easier to be able to do it right at your home without having to even go to the bank. I can just do it wherever I am. I do not consider myself a techie person, but they make it very easy. I did not feel mobile banking was difficult to learn at all. Give it a try. You're going to like it.
Today we're talking about home equity loans with Marlois Jorgensen at Winona National Bank. And Marlois, thank you for joining us today.
Thanks for having me, Dave.
Marlois, if you could explain the difference between a home equity loan and a home equity line of credit.
A home equity loan is typically a balloon loan with a fixed rate and a fixed payment. It's also known as a junior mortgage or a second mortgage on your home. A home equity line of credit, on the other hand, is a loan that's taken out for 10 years. It's also using the equity in your home, but it's a variable rate, and that's based on the prime rate usually.
So Marlois, is there an advantage to one over the other?
Yes, there is, basically, but it depends on what your needs are. If you're looking for a fixed payment and a fixed rate, you'd want to go with the home equity loan or the junior mortgage. If you're looking for something a little more flexible that you've got a little bit more control over, you'd want to go with the home equity line of credit.
Are there any advantages that one has over the other?
Well, there could be, yes. The risk would be that it's a variable rate loan, so that rate could go up over the life of the loan. But right now, it's at a historical low, so it's a good time to get into it.
So could you tell us when a HELOC might be better to use than a home equity loan?
Sure. In a case where you may need to borrow money further down the road, if you took out a home equity line of credit, and let's say you use $50,000, depending on the equity you have in your home, but you only needed $10,000 of it to repair a roof or to put a new roof on your home. But your thoughts are that maybe you'd want to remodel your kitchen or your bath further down, but not right now. This saves you from going through the application process again and from going through closing costs again.
So Marlois, under what circumstances would we use a HELOC?
Basically, you can use a home equity line of credit or a HELOC for any reason. As long as you've got the equity in your home and you qualify for the loan, you can use it to make repairs to your home, to remodel, to purchase a car, basically for any reason. You control that money.
So it's our money and we are free to use it as we wish.
It's your money. You use what you need. You pay it down. You reuse it. And like I said, it's out there for 10 years. So you've got that option of using that money over and over again without going through closing costs and application again.
I read somewhere that lenders have the right to cut a home equity line of credit. Is that something that's true?
Okay, with a home equity line of credit, we don't cut that line. You've got that loan for 10 years. It's yours to take care of the way you want to. You control that money. So you use what you need. Even if you never use it, we don't cut that line. It's there for 10 years.
Well, Marlois, thank you so much for taking some time to talk with us today about home equity line of credit.
Thanks, Dave, for having me. If you have any questions or if any of our clients or listeners out there today have any questions, please have them call the bank and ask for a retail banking officer.
All right, very good. Thank you.
Thank you.